Asset-based finance covers a wide range of asset classes. We could think of them into 4 different categories: residentials, consumers, commercials, and hard assets. Asset-based finance focuses underwriting based on the tangible value of assets and the cash flows they generate.
So I think the most interesting thing about asset-based finance, it's an asset class that has a multi-decade reputation as being too risky or too complicated or too illiquid or too opaque. And as a result, it is deemed uninvestable by large parts of the world. And what's ironic about that is we tend to find the asset class is actually less risky. It's actually less opaque. There's a better ability to look into the underlying collateral, to look into the underlying cash flows, and have confidence in the ability to predict those cash flows, or at least predict the range of outcomes around those cash flows. So for an asset class that tends to be viewed as risky or illiquid or complex or rife with bad underwriting, we actually tend to find that the truth is on the other end of the spectrum.
Asset-based finance have several distinct advantages that makes it a resilient investment options and provides stable returns across economic cycles. First, it focuses on real assets, which means stronger downside protection in case of borrower default. Second, investment risk decreases over time as instruments like mortgage and auto loans make principal payments along with the interest payment, unlike corporate loans. And finally, diversification across sectors, from real estate to royalties, and backing by the pool of thousands of underlying assets creates a smoother return profile across economic scenarios.
Like in any credit asset class, the key to longevity in the asset-based finance space is good underwriting. There is no workaround to good underwriting. So in the case of asset-based finance, the underlying risk tends to be residential real estate or commercial real estate or consumer credit or hard asset exposure. We have to start with the ability to underwrite that risk fundamentally and then map that fundamental underwriting to the structure around the credit exposure.
Our investment approach isn't about just exploring new investment areas. It's about maintaining deep expertise across the entire asset-based finance spectrum. It's about consistently generating positive returns. It's about the flexibility in deploying capital across various asset classes that allows us to adapt quickly to market disruptions and seize on compelling investment opportunities. It's not about what we do, it's about how we do it. And that has resulted in a track record that distinguishes us from our peers.